Welcome back to Investing Talk podcast. Today we're focusing on Melco Resorts and Entertainment, a significant player in the casino gaming and entertainment resort industry with a primary footprint in Asia and Europe too. Okay, let's unpack this.
Absolutely. Our analysis today, it draws from an April 2025 due diligence report, a company overview, and some recent news updates as well. Our aim really is to give you a clear understanding of Melco's recent performance, its financial health, and maybe what the future might hold, separating the signal from the noise.
Right. We'll be examining their latest financial results, like how their revenues are growing, how profitable they've actually been lately, and we'll explore what sets them apart, their competitive edge in the industry, take a look at their management, and definitely consider the key risks and opportunities. Plus, we'll see how they stack up against major players like Sands China and Wynn Macau.
Okay, let's begin maybe with that financial performance. For the full year of 2024, Melco's total operating revenues hit approximately $4.64 billion. Now, as our report points out, this signifies a notable recovery, especially when you think about the impact the pandemic had in prior years.
That context is crucial.
It is. This rebound is really a critical point to grasp their current trajectory.
And drilling down a bit, the fourth quarter of 2024, revenues were $1.19 billion.
That's right. $1.19 billion, which is a 9% increase compared to the $1.09 billion they reported back in Q4 2023.
So an upward trend there. That's definitely something to watch.
Indeed. And the net income attributable to Melco for the entire year 2024, that came in at $43.5 million, which translates to earnings of about $0.10 per American depositary share. That's often how these international shares trade in the U.S.,
Right, the ADSs.
And this is a significant turnaround, considering the net losses they saw before. There was a substantial loss, remember, of $0.47 per ADS in Q4 2023.
Oh, yeah.
So this return to profitability for the full year, that's a key development.
Now, I know we don't have the specific PE ratio, debt to equity, free cash flow, or ROE figures right here.
No, not directly in these summary notes.
But they are really important for a complete picture, aren't they? The report does mention you can find it in their SEC filings, the 10K, and financial databases. A company's PE, for instance, tells you how much investors are paying for each dollar of earnings. Useful for comparing valuations.
Absolutely crucial metrics for deeper analysis. Okay, shifting focus a bit. Let's talk about the business itself and the industry. Melco has several competitive advantages. Strong brand recognition, for one, particularly among, the high-value customers in Asia.
The VIPs and premium mass market.
Primarily, yes. And their diverse non-gaming offerings, entertainment, hotels, food and beverage, that's important too. Plus, their key operating licenses. Those act as a considerable barrier to entry for anyone new wanting to get into markets like Macau. Think of it like a protected turf.
So they're really positioned as a major player, an integrated resort operator, right alongside Sands China and Wynn Macau.
Correct. And what's fascinating are the big industry trends impacting them. The post-pandemic recovery in demand is obviously huge right now. Also, the regulatory landscape in Macau is always critical. And technology, enhancing the customer experience, that's increasingly vital.
And on the flip side, potential downsides. The report mentioned geopolitical tensions affecting tourism.
Yes, that's a risk. And the ongoing possibility of shifts in gaming regulations, always hanging over the industry to some extent.
Okay. Let's touch on management and governance. CEO Lawrence Ho, he's been around a while, hasn't he?
He has. His long tenure since founding Melco Crown Entertainment, it's noteworthy. His track record includes significant strategic expansions, and having a stable executive team provides continuity, which I think is valuable in a sector like gaming that's so heavily regulated.
And things like insider trading activity. The report says you look at the SEC Form 4 filings for that.
That's the standard place, yes, if you're tracking that closely.
Turning now to valuation and risk.
Yeah.
Specific price-to-book ratio wasn't given here.
No, but the report suggests for companies like this, it typically falls between, say, 1 to 3 times book value. Dividend yield. Historically low or variable. That's not too surprising for companies reinvesting heavily in growth, building these massive resorts.
Excess.
And beta, which measures volatility against the market, expected to be moderate. Leisure sector stocks tend to be cyclical,
Right. Depends on consumer spending.
Mm.
And for asset-heavy businesses like casinos, price-to-book can be quite telling, can't it? How the market values their physical assets.
It's definitely a useful metric in this industry. Now, the primary risks highlighted again. Regulatory changes in Macau, number one.
And geopolitical events hitting tourism.
Exactly. Good to note, though, these sources didn't flag any recent major lawsuits.
Okay, how does Melco stack up against its peers? Sands China, Wynn Macau.
Well, that 9% year-over-year revenue growth for Melco in Q4 2024 seems pretty much in line with the recovery trends we're seeing across the board for Macau operators post-pandemic.
And profitability. Melco's positive EPS for the full year 2024, that $1.10 per ADS. That's a positive sign.
It is, especially when you compare it to Sands China and Wynn Macau, which have seen more, let's say, variable profitability, often swayed quite a bit by those regulatory shifts we talked about.
So, strategically, Melco is a key operator in Macau, expanding in Europe. Sands China has the biggest market share in Macau.
And Wynn Macau really focuses on that premium luxury end of the market, so they each have their own kind of niche or focus.
Now, the recent news updates had some interesting points. Melco reported improved earnings performance back in February 2025, suggesting continued recovery.
Yes, but here's where it gets kind of interesting. There's a point of contrast in the news. As of February 27, 2025, they reported a net loss of US $20.3 million for the fourth quarter of 2024. That's about US $0.05 per ADS loss.
Hang on, that seems to contradict the positive net income for the full year you mentioned earlier.
It does, and it really underscores why you need to look at both the annual picture and the more recent quarterly results. You need both to get the full story.
So the full year was profitable overall, but Q4 ended in a loss.
Apparently so. This dip in Q4, well, it might suggest maybe increased operating costs late in the year, or perhaps shifts in market conditions, something that warrants a closer look in their detailed filings.
That difference is definitely something to dig into. Raises questions.
On a more positive note, though, Melco holds the most Michelin stars in Macau, according to the 2025 guide.
Ah, the food and beverage side.
Exactly. It highlights the quality of their dining, their commitment to a premium experience beyond just the gaming floor. It's part of that integrated resort appeal.
And strategically, they're exploring options for their City of Dreams Manila property, part of an asset-light strategy.
That's what the report suggests. This move towards being asset-light, it could mean they want to focus more on management expertise, brand strength, maybe lower their capital expenditure risks.
But it might mean less direct control.
Potentially. It's a trade-off. Reducing capital tied up in physical assets versus maintaining full control. It certainly raises an important question about their long-term strategic direction, doesn't it?
It does. The news also mentioned strong market share growth for Melco in late 2024 and early 2025.
Yes, that's an encouraging sign on the operational front.
Although, while there's some positive analyst sentiment, Melco mentioned on lists of potentially promising penny stocks.
Right, but it's also noted, for perspective, that some believe AI stocks might offer higher potential returns right now, just providing that wider investment context.
Okay, so let's recap maybe. Potential red flags and strengths. Red flags. Regulatory risks, especially Macau. High competition.
Definitely. Strengths. That diversified portfolio across different regions, and the international awards, the recognition for quality, like those Michelin stars.
Looking ahead then, what should people watch for? Upcoming earnings reports.
For sure. Earnings are key. And any regulatory updates out of Macau, always critical.
Risks to keep in mind. Potential economic downturns hitting spending. And stricter regulations, always a possibility.
However, the report does highlight Melco's strong liquidity, their financial reserves, and their cost optimization efforts. These could present opportunities for future growth and expansion.
So wrapping this up, as you consider Melco Resorts and Entertainment, what we've seen is a company showing a solid recovery in revenue and a return to profitability for the full year 2024. Although that fourth quarter did show a net loss, which adds a layer of complexity. Their strategic moves, like looking at options for City of Dreams Manila and that continued recognition for quality. It suggests they're being proactive in a very dynamic market.
But, as we've discussed quite a bit, the gaming industry, particularly Macau, it comes with built-in regulatory risks, and the competition is just intense. Keeping a close watch on those factors alongside their financial reports is going to be crucial. Which really brings up a key point for you, the listener, to think about. How will Melco manage to balance this potential shift towards an asset-light strategy while still maintaining its high-quality offerings and its competitive edge in the long run? That's a crucial question, I think, as you continue to monitor this company in the broader industry, something to really mull over.
Thanks for taking this look with us. If you found this analysis helpful, please do subscribe, like, and comment. It genuinely helps us bring you more of the information that matters to you.